Hey everyone, Dave Keller here with Market Misbehavior. Today we're going to talk about Netflix breaking out to the upside. So there's no denying 2023 has been all about the incredible movements in a relatively small number of leadership names, what we call the generals. The FAANG stocks, or what we call the phenomena stocks, have had an incredible 2023 thus far. Arguably, the average stock in the S&P 500 has had a much less attractive year than this small number of names. Out of that group of FAANG stocks, though, one of the worst performers out of that group has been Netflix. Still not a bad year, but relatively speaking, it's underperformed things like Apple and Microsoft and NVIDIA and other names that have done very well. Strong week with Netflix on Friday, up about 6%. And overall, this is pushing us to a new 52-week high, and certainly a new high for 2023. Does this indicate high potential of further upside for Netflix? We think so, but we'll show you why from a technical perspective here in a minute. Before we get to the chart, by the way, if you like this sort of thinking about technical analysis, behavioral finance, and investor psychology, why not subscribe to my channel? Also, give the video a like if you appreciate it. We would very much appreciate that back. Put a comment below. Do you think the next 10% move in Netflix is higher or lower, and why? Give me a comment, let me know why. Now, looking at the chart of Netflix here, this is a chart I actually set up about a couple months ago after we had the run to the peak in February, and it sort of rallied up into February, sold off into March, and then we were sort of in the middle of the range. So I put these two sort of horizontal lines to indicate the peak and the valley so far for 2023. And it was just a visual cue for me to keep in mind and tracking these movements over time. And I actually set price alerts on the StockCharts platform for if and when Netflix broke above this range to the upside, and also one for if it broke below to the downside. Just today, I got the alert that Netflix had broken out to the upside, which is why I brought this chart up to review. What's so interesting about these sorts of names, and I think why support and resistance levels are so valuable, particularly in a year like this, where we've had a lot of choppiness at the beginning of the year, and a lot of stocks that sort of had this big swing, set sort of that as the framework of the chart, and then wait to see which way we break. At some point, Netflix is going to break out or break down out of that range, and when you have what's called a basing pattern, a sideways pattern, sort of a rectangle on the chart, that can be a great way just sort of alert yourself or have a system alert you when we break out of that range. So we've now broken to the upside. What does that mean? Well, first off, I would say anytime there's a break, I think of any sort of signal like this in three parts. There's the setup, there's the trigger, and there's the confirmation. The setup tells you there's a potential pattern. That's the basing pattern that we've talked about. That's a setup on the chart that tells me I want to focus on a particular price level. Around 375 is where I had my alert set. The trigger is when we actually close above 375, which it appears like we may do today. I'd like to wait for the close to confirm that that's going to happen, but so far it's certainly on my watch list for the day. Then there's the confirmation, which is the follow-through day. So I will qualify everything I'm about to say by I'm going to assume that there's some follow-through next week after the holiday weekend. If so, I think that would validate a real upside potential for a chart like Netflix. A lot of times you'll have a whipsaw where it closes through resistance and then trades right back lower, which is why successful analysts and traders like John Murphy, Tom DeMark, Larry Williams, and many others have some concept of a follow-through day in their methodology. I've adopted that same mentality, and it has served me very well, and it's kept me out of whipsaw type of names, and it's helped me to stay focused on the more sustainable rallies and breakouts. Now let's look at the other two indicators. At the very bottom, we have the relative performance, what we call true relative strength, and that overall has really started to improve over the last 4 to 6 weeks. Not as strong of a relative performer as some of the other leadership names like Apple, Microsoft, Alphabet, but really coming into its own here in the month of May. As the major averages sort of chopping around, Netflix actually rallying pretty nicely to the upside. Now let's look at the RSI, the Relative Strength Index. Note how the range that the RSI is in. Just recently, we had the rally in March. April pulled back a bit, and you can see RSI bottomed out around 40, we'll call it 42, and then rotated back to the upside. In a bullish phase, the RSI doesn't tend to get much below 40. You can see an example of that in the second half of 2022, right? Found the low over the summer, sort of spring, summer, sort of rallied, and you can see the RSI sort of elevates, rarely gets below 40 on any pullbacks. That's one of the great indicators that you're probably still in a bullish phase when the RSI remains above 40. We broke that in March, which was sort of a question mark. That's why I sort of put these levels out here, because it felt like we might be entering a new phase, maybe more of a consolidation phase or a potentially bearish phase. Turns out this may have been more of a consolidation because now the RSI is bottomed around 40 and we're rotating higher. In a bearish phase, by the way, the RSI does the opposite. It tends to become oversold on sell-offs, and on the rallies, the RSI rarely gets above 60. You could see that sort of late 21, first half of 22, when the RSI spent most of the time, all of the time below 60, and most of it actually below 50, which is more characteristic of a downtrend phase. So we had a rally in the second half of last year, sort of consolidating so far this year. This may be the rotation out there. And I think on any pullbacks, as long as we remain above an RSI of 40, it's going to be a suggestion that probably the bullish phase is still okay. If we would break an RSI of 40, that's when you have to really put a big question mark on the sustainability of an uptrend. Now, to really validate what may happen next, I like to bring in Fibonacci retracements. We've done a number of videos on my channel using the Fibonacci methodology. I've had a number of questions on it, so I'm going to use it in a couple different examples just to sort of demonstrate how you're able to apply these tools along with a framework of other indicators. If we run a Fibonacci analysis, what we're basically saying is November of 21 was a significant high, May of 22 was a significant low. And looking back over the last 2 years, that's pretty much the extreme. That makes sense as a framework. The first Fibonacci level is 38.2% of the way back up. It's just below $370. You can see that's where we reached in February of 2023. Really reached there in January, retested it a couple times in early February and pulled back. It's uncanny how often these Fibonacci levels end up being support or resistance levels, which is why I use it fairly consistently. So if you think about it, this move in February into March could have just been a pullback from that Fibonacci resistance. Now we've come back and round-tripped back to that resistance around 370. Now we appear to be closing above there. So going into next week, I would love to see if we remain above that level, which I think now becomes a likely level of support. If we continue higher, which I think is more likely given the trend and the characteristics up until now, where do we go from there? And that's where Fibonacci analysis can be helpful as well. The next objective would be around 433. Now that's a 50% level. It's a less commonly used and less meaningful, less valuable in my work. So I like to usually wait for the 61.8% level. Here's where it gets really interesting. Technically, the 61.8% level is right around 497. That's really close to a big round number of 500. If we would rally off of those levels, could we see upside potential to 500? I certainly think so. If and when we do get up to that point, I would argue that the upside beyond that is probably fairly limited because you can anticipate sellers will come in or there will be an exhaustion of buyers at that next significant Fibonacci level. So that's the overall setup I see for Netflix. Again, this week having a nice finish to the week, assuming we finish this week strong, is pretty compelling. It's all about the follow through. So I would say next week, do we continue above that 370, 375 level? As long as that holds, that's a pretty positive setup. We've now broken out of this range. The momentum characteristics are pretty strong and the relative strength is improving. What may come next? We use some Fibonacci levels. The 50% levels around 433. The 61.8%, which I think is probably more of an ideal upside objective, is just below $500 a share. That may be the next upside objective for this stock. What do you think of that framework and that analysis of the chart of Netflix? Put a comment below. Let me know what you think of the chart of Netflix and what tools you're using to draw that conclusion. For Market Misbehavior, I'm Dave Keller. Be well. Have a great one. I'll talk to you again soon.